I'm going to talk about adjusting entries in case you need some help with adjusting entries. I want you to print off this, kind of go through it with me, and then make yourself some notes and practice. It's really all about practice. A lot of people think they actually know this, and then they find out they're wrong. So I'd encourage you to figure out whether you know it or not prior to the test, because a lot of students have difficulty with it. Okay, so first of all, the reason we have adjusting entries, the reason we have adjusting entries has to do with the matching principle. And the matching principle says if we have 2 years, I'm going to put year 1 and year 2 here, okay, that the revenues and expenses have to match the period that they pertain to. So for instance, if the revenue is earned in year 1, I need to record it in year 1. If the expense was incurred in year 2 or year 1, I need to incur it in year 1. And revenue and expense in year 2, I have to record it in the year it pertains to. So here's a question. What happens if I earn the revenue in year 1, but they don't pay me until year 2? Okay, so for instance, when they pay me in year 2, I debit cash because cash is going up. But if I record this journal entry in January of year 2, the question is, what is my credit? Okay, and so for somehow I want to make sure the revenue is recorded in year 1, but the cash doesn't come into year 2. Another thing that can happen is if the cash comes in year 1, but the revenue isn't earned until year 2. So a landlord may charge rent before the month starts, so they would get the rent here, but they wouldn't earn the rent revenue until here. The same way with an expense, the tenant would pay the cash in year 1, but wouldn't incur the rental expense until year 2. And then also we could have an expense incurred in year 1, but it actually wasn't paid until year 2. And a good example of that are wages. So wages you may pay wages for the period of a week, but you don't pay them until Friday at the end of the week. And so you could actually incur the rent wages expense in year 1, but the payment's not going to come until year 2. So adjusting entries are made at the end of the month, quarter, year, and it's basically to get the revenue and expense in the correct year. Okay, so basically you can make them at the end of the month, quarter, or year. We have to make them yearly. Depending on if management wants financial statements for the month or the quarter, you may have to make them more, but we need them at least yearly. So adjusting entries will always have an income statement account, and an income statement account is a revenue or expense. So when we get down to adjusting entries, you'll see that we are having revenue or expense in every single adjusting entry. You'll also have a balance sheet account and asset or liability account also. No adjusting entry will ever have cash in it. And the reason is if you have cash in the same period, let's say I pay my rent every day, I will debit rent expense in cash, and I will do that for today, and so the journal entry, the expense gets in the right period. So the whole purpose of adjusting entries is because cash comes at a different point in time than the revenue or expense, that I have to make an adjusting entry. So no journal adjusting entry will ever have cash in it. Journal entries have cash in it, but not adjusting entries. Okay, so just want to remind you of your debit or credit rules. And debit or credit rules, hopefully you've written these out. Printing out mine really doesn't help you because you need to practice it. So I'd practice writing your own every time. So assets are increased on the debit side. Liabilities and owner's equity are increased on the credit side. Revenues are increased on the credit. Expenses and dividends on the debit. Okay, so I generally, before adjusting entries, I make this. So I look at this column first. Okay, and so basically I know that every single adjusting entry will have a revenue or expense. So the first thing I ask myself is it a revenue or expense? And I go ahead and write that down. So if it's a revenue, I'll credit the revenue. If it's an expense, I'll debit the expense. That leaves me on my revenue that I will need a debit. The debit will either be a receivable if I haven't yet paid it, or an unearned if I've already paid it. So these entries have um, I've made a journal entry when I received the cash and I put it into that. So we'll talk about that later. An expense will either have the other side, the credit will either be a payable if I haven't yet paid it, or prepaid if I've already paid it. So kind of get those in your head. For the most part, that is pretty much always the same, unearned or receivable. And prepaids, you might have some difference in the terminology, but they are still an asset. So notice the revenue will always be credited, but the debit will either be a liability or an asset. An expense will always be debited, but the credit will either be an asset or a liability, depending on whether I've already paid it or haven't yet paid it. So back to this statement up here, every single adjusting entry will always have an income statement account and a balance sheet account in it, and this proves it. Okay, so one thing that I'm going to do is we need to figure out the amount of time our adjusting entry is for, and that basically is dependent upon how often you make the adjusting entry. So if I'm doing it only for the year, I may be adjusting for 6 or 7 months. If I'm doing it on a monthly basis, I'll always be adjusting it for a month. Okay? All right, so Company A paid Company B rent for 6 months on September 1st. The amount for the 6 months is $6,000, so it's $1,000 a month. The company has a calendar year end. Okay, so first I need to see if they make the adjusting entries monthly or yearly, because if I'm making it monthly, it's $1,000. If I'm making it yearly, I need to adjust for September, October, November until December 31st, so I'll be adjusting for 3 months. Okay, so the I will have an original entry and then I'll have the adjusting entry. Okay, so here's my question. My next question is I'm going to ask myself, is it going to be a revenue or expense? Well, that's going to be dependent upon whether I make the journal entry for Company A or Company B, because Company A is the tenant, Company B is the landlord. So that's going to be a big difference. Okay, so Company A, we paid it, so it's an expense, so I have a debit. Okay, so I'm actually going to go ahead and make the original entry for Company B. So when Company B actually paid it, they paid it with cash, so I'm going to credit cash, but my debit is prepaid rent. So this is the journal entry on September 1st. Okay, so September 1st, I'm going to make this journal entry. So my debit prepaid rent. And that prepaid rent I would have for $6,000, and I wrote the check for cash, so I'm going to credit cash for $6,000. Okay, but first I ask myself, is a revenue or expense? It's an expense, so we are the tenant, so I debit the expense, and then I ask myself, what is the credit? Okay, now if we're doing it for Company B got the cash, so I'm going to debit cash of $6,000, and I'm going to credit unearned rent. Okay, and I'm going to credit unearned rent because we haven't yet got the rent. So I'll talk about that in just a second. But the point is, for Company A, it's a rent expense. So I'm going to debit the expense, and for Company B, it's rental incomes because it's the landlord. Okay, so now I need to figure out if cash came before or after the adjusting entry date, and in this case it came before because I paid rent in advance. So notice that I paid I can find it here, paid B rent on September 1st for 6 months rent. Most of the time you pay rent in advance because after all, you probably if you paid it after the time you lived in it, some people wouldn't actually pay it. Okay, so I'm going to credit prepaid rent and unearned rent since it came before. Okay, now I have to figure out, all right, how much is my adjusting entry? So I've remade the original entry now. So my original entry when I paid the cash is credit cash, debit prepaid rent. Prepaid rent's an asset. And for the landlord, they got cash, so cash is going up, so I debit cash, and I credit unearned rent, which is a liability. Okay, and so look at your journal entries. I put it in prepaid rent, and as I use it up, I take it out of prepaid rent. Okay, so the question is, how much do I take it out? Okay, so how much do I take out? So it depends on if I'm making adjusting entries on every month or at the end of the year. So if I'm making adjusting entries every month, I simply need to take out $1,000 at the end of September, at the end of October, at the end of November. So I'd make this entry 3 times. If I'm only making adjusting entries September, October, November, December, I guess I've got 4 adjusting entries. And so if I'm making it only at the end of the year, instead of 4 separate entries of 1,000, I just make 1 entry for 4,000. Which one is better? It doesn't matter. If somebody wants financial statements at the end of September, October, November, and December, you're going to have to do it this one. If somebody only wants financial statements at the end of the year, I only have to do this one. So notice what happens if I made a T account of prepaid rent and rent expense. Okay, so this is my rent expense. This is my prepaid rent. Okay, just deal with my little things there. Okay, so my original entry is I put in 6,000. Okay, at the end of every month, I took 1,000 out and put it into prepaid or into rent expense. Okay, so notice at the end of month 1, I have 5,000 in there, and I have 1,000 in rent expense. Okay, so these two add up to the $6,000. At the end of the next month, I take another 1,000 out of there, so there'll be 4,000 in here and 2,000 in here. At the next month, I'll take another 1,000 out. At the next month, I'll take another 1,000 out. So eventually what happens is all $6,000 is moved to rent expense. By December 31st, I have taken out 4 months. Okay, so my rent expense has 6,000 minus 4,000. I'm sorry, my prepaid rent has 4,000, has 6,000 in it. I took out 4,000, so I've got 2,000 left in prepaid rent. In rent expense, I've moved over 4 months, so 4,000. So at December 31st, I have 2,000 left in prepaid, 4,000 in rent expense. That adds up to $6,000. Okay, so again, I'm just simply moving 1,000 out of prepaid rent into rent expense. So notice that in both cases, regardless of whether I do it 4 times or 1 time, at the year end, prepaid rent has 2,000 left in it, and rent expense has 4,000 in it. Okay? Next one. Let's take the landlord's situation. In the landlord, when my original entry went into unearned rent, which is a liability, that's probably the most often missed thing, liability, because I owe them my rent. I don't necessarily have to owe people cash. You can think of it this way: I either owe them my building or I owe them the cash back if I don't let them in my building. So at the end of each month, I'm going to take it out of unearned rent. So notice I put it in a liability with a credit. So here's my unearned, and here's my revenue. Okay, so I put in 6,000 into unearned because it's a liability. I owe them money. And at the end of every month, I take 1,000 out of unearned and put $1,000 into revenue. So at the end of month 1, this has 5,000 left in it, and this has 1,000 in it. So that's $6,000. And at the end of the next month, I take out another 1,000 and put it in there. Next month, I take out 1,000, etc. So I'm simply moving them over from the unearned to the revenue as it's earned. At the end of 4 months, I'll have 2,000 left in unearned rent and 4,000 in rent income. So that's all I'm doing in adjusting entries.